Okay, real quickly, let's review how we run these calculations in Excel again in order to do horizontal and vertical analysis. So the first question you have here, after you compute the current ratio, asks you to express the income statement in common size percents. Well, if you remember when we were talking about the income statement, we want to express everything in terms of sales. So we're going to set sales to 100%. If that means sales are 100%, we would just take sales, in this case in 2010, and divide it by that sales number, and that's going to be 100%. Let me go ahead and modify, make all those percents, and we're going to add a couple of decimal places as well. Okay, so this is the formula that we're going to need for the rest of the spreadsheet. The only problem is that we want to lock in this row up here. So what we can do, if we come in and we modify this cell, which says B8, which is column B, row 8, we want to lock it onto the 8. So if we put a $ in front of the 8, that means every calculation for that denominator will not change, but when we move columns, it will update. So now I can just drag that down and across. Should have been able to do it all in one, but that's okay. So we've copied that formula, and you can see now it says access D15, which is row 15D, and then divide it by, again, we're stuck on D8 up here. So that works perfectly for us. So that's done. Now we can do part B, which asks us to express the balance sheet in trend percent. So when we do that, everything should be set up in terms of the oldest year. So in this case, that's going to be 2008. So same thing like we did above, we're going to take the 2008 current assets and divide it by the 2008 current assets. Now this time, instead of sales being our denominator, we want to use the oldest year, which will be 2008, which happens to be, well, which would be this column, which is D. So we'll put the $ in front of the D this time. Again, sorry about that. I need to change all these to percents. And we're going to go ahead and add a couple decimal places. But now we can copy this formula and we can copy it here, and then you're done. That's all it's telling you. So now we can see, let me explain the results here just a little bit. So in 2010, if sales are 100%, cost of goods sold was 60% of sales. And so their gross profit was a little less than 40%. Of that, expenses accounted for 23.2%, and so on. This says, so in 2008, current assets were 100%. They fell to 74.81% in 09, and they've somewhat slightly rebounded in 2010 to 93.7% of what they were in 2008. It's more important when we look at things like total assets, retained earnings. Again, there's some good growth here in our retained earnings. Real quickly, let's switch over to the second part of the assignment, which is asking you to do ratios. I would use this template and use Excel to help you calculate that. So for example, current ratio is current assets divided by current liabilities. So if you put a plus or an equal sign, you can start your calculation. I would put in parentheses what my current assets were. We all know by now cash is a current asset, so we're short-term investments, and I'm just adding using the Excel to do that, and I'm just clicking on the cell as I go for the items that I want. Trade receivables, perfect. And let's see, oops, something happened here. Oh, I hit the wrong, need a plus there. Inventory and prepaid expenses, those are all current assets. And then we need to divide that, so I'll hit the backsplash and I'll do parentheses again, my current liabilities, which are accounts payable, accrued wages payable, income taxes payable. Long-term notes are long-term. So then I go ahead and I get 3.42 to 1. So that's pretty good. They've got a fair amount of current assets to current liabilities, and I will do that for all of those using the formulas, or the little cheat sheet, I guess you could call it, that are on page